All right, we are back, SPY, on a Monday going into Tuesday. We got a lot of action that's going to take place because CPI numbers are coming out. One of the biggest catalysts of the year since inflation is up. So I want to talk about game planning on execution. We did not execute like we really wanted to. And then we executed and just weren't patient enough. So I want to talk about the mistakes we made and how to avoid them. We talked about key levels last night. If you looked at the video yesterday, key levels were 417 and 406. I knew that if the 417 could not hold and it broke, then we could rally to 430. Me and Alex talked about it. But also, if we broke below any key level or couldn't break above that, then we would be headed to 406. So the biggest mistake we made is we didn't get confirmation. So right now we're looking at again these key levels. What was the high? Let's look at the weekly. The high of the week was last week. The high was 415. So he said 417 was the key level. We got a 417 break, 417.62, and we said that we wanted to play that breakout, get long if we broke that resistance. It happened. Let me pull down the 5-minute chart. It happened, and unfortunately, after we got what we were looking for, after we got what we needed, we actually ended up running a little bit higher, but never completely broke out. So again, 417 was it. We double topped, and then obviously you see a pullback. So I don't know why this will not allow me to. Okay, this is way too flat. Let me get a let me try to pull up my chart. Okay, here we go. All right, so I don't know what they were doing or thinking. Again, a lot of times when SPY makes a move, when the market makes a move, it makes the opposite move before it makes the true move. So again, we're going to spike up above the pre-market high. A lot of times when the stock rallies above the pre-market high, it's going to keep running, and keep running because this is major resistance. So, and when the stock goes below the pre-market low, it keeps falling normally. So every now and then it chops you up, and it does the opposite of what you think it will do. But the main thing was that we looked at 417 as a level that was pretty reliable. Okay, so whenever we see this, we need confirmation. Confirmation is the most important thing. When we broke 417, which was pretty good resistance, we probably should have waited. Now we bought calls, they didn't work, we got stopped out. Small loss, not a big deal, but I'm looking to correct these mistakes. What did we do? Where did we go wrong? Well, number one, anytime you're trading in the morning, the first 30 minutes, there's going to be a reversal. You can almost bank on it 90+% of the time. Okay, so number one, we want to buy normally after the first 30 minutes to an hour of the market, because we got the most volatility at the beginning of the market and at the end of the market. So today we got a 2-point move, 415 and 417. 15-minute is normally a really good confirmation time period, but in this case we just we were about, I guess, 45 minutes off. So whenever we saw the breakout, we got long. When we seen it fail, we got stopped out immediately. We got on the short side. Okay, so I'm gonna show you the call that we made on the short side. Once we adjusted and switched to puts, so we got in these puts. Okay, 17 cents. This was at 9 o'clock. All right. So we got SPY puts 412 for 17 cents. Okay. By the time it fell, we were looking at SPY puts at, well, so first we were down 50% on the position. Okay. So went ahead and sold out. Then, as you can see, the market sells off. So we go from 417 all the way down to 412, 412.50. Okay. So we're almost in the money. All right. 450% is the return from buying 17-cent puts and selling them at around $1. So we made a perfect call. The problem is we didn't get the confirmation. All right. So first thing we should have done, let's just look at the 30-minute. The 30-minute told the story today. All right. We get a huge bar the first 30 minutes of the market, and then the next bar we double top. I'm going to remember this pattern. We double top and go red. Okay. Even with the choppiness, 416 back up to 417. We opened up at 416, back up to 417 again, and then the market just completely sold off. We could have waited until we got this break, this VWAP, a break on VWAP. VWAP was around 416.50 at the time. I don't have it up right now, but it was around 416.50 at the time. And then we just got the big sell-off. So in an hour and a half, we went 5 points, 417 to 417, an hour and a half. Okay. So again, once we got chopped up here, the spike, we think we're going to flush. We spike, we think we're going to flush. And then we made a last spike, made a last move up before a huge move down, a rally, and then another move down. Okay. But what we should have done was have a predetermined game plan that we were going to follow. If, like me and Alex were talking about, we got a false breakout like this was, and then the market just never confirmed another high. So we'll be looking at the 15-minute a lot closer, and we'll be looking at time frames as well. Normally, the first 30 minutes, this is 30 minutes right here. Normally around 10 o'clock Eastern, 9 o'clock Central, that's kind of when the market is going to start reversing. So again, you saw this 417, we dipped all the way to 416.20, but then we got this huge rip. So if you got stop losses, if you got a stop loss in, you're going to get stopped out. Sometimes you have to just put the premium that you're willing to ride with, that you're willing to risk, and just let it ride. Okay. Stops, again, they know where your stops are. They do these kinds of things to stop you out. You know, even here when we get the big move down, the secondary big move down, the biggest move from 416 all the way down to 413, you still got another move just to take out stop losses, just to squeeze out every single bear before we go to the all-time low, to the low of the day today. All right. So mistake number one, I didn't say what we're going to do if the market double tops and acts like it's breaking out, but it never does and makes another high after the first 30 minutes. Number two, we should have, once we did make the proper adjustment, that's one thing we did do well. We did not stay in it as long as we should have. Okay. It looks like the market is going to be making a turn, making another reversal around 11. You know, first 30 minutes is the most volatile. It's going to kind of give you it's going to kind of settle into a pattern. And then whatever direction after that over the next 30 minutes, you can expect it, whether it's going to ride higher, whether it's going to ride lower. But either way, we didn't stay in this. Even one candle would have gotten us 300%. Okay. So, we just got to look at that and be more patient. And especially, when we should have either bought the dip, and sold the rip, or we should have waited until we get this new high taken out to get more calls and ride this upward momentum. All right, because like I said, at the end of the day, we're looking at these levels. We looked at these levels yesterday. What's the big level? The big level is 417. That's where we got 417 from. That was the previous resistance. 417.90, 417.60. So what is this? 417.44 was exact. We got 417.62 here. All right. Now on the weekly, we're setting up to repeat what happened in June. You see the big red green candlestick, super tight range the next week with a red candle, and then a big sell-off after that. Once again, we get a big rally, a big green candlestick, super tight range even though it's green, but then this candle we're looking to possibly play out like this candle. All right. So again, have a game plan for if your plan works perfectly, but also have a game plan to take advantage if the market doesn't move in the direction that you think it will. That's what we were missing. Once we did execute, we did not stay with the trade long enough. So we're going to make the adjustment, look at time frames more carefully, and see if we can get some downward action. Now, last thing, I'm going to look at these levels. Once again, the levels that we're going to be looking at is 412. Once we break 412, we should probably not have any problems falling down to that 406 level. Let me see here. So again, it's been trading in this range for 1, 2, 3, 4, 5, 6, 7 trading days. All right. It's been trading between 406 and 415. 408, 407, 413, 414, 408, 407, 412, 416, 410, 415, 412, 409, 414. Now today was 411 and 417. But again, this is the low. This is the low of this channel. And this is the high, 417. So until we break out, we're going to be trading here. If we take out these highs, if we take out 417 again, we're going to really be looking for a rally, especially if it confirms. If we take out these lows of 406 lows, unless it doesn't confirm, unless it just dips with a long candlestick and rallies up, we're going to be looking to retest all the way down to this 20 moving average around 399, which coincides with a range from previously before. So I mean, like I said, you can apply this chart to pretty much all of them. Apple, same thing. 161 all the way to 167. So at some point, if we get a pullback, Apple's going to be trading back around this 160 range because you just see this flag, you see the highs, and you see the lows. All right. So let me see what else. SPX, same thing. If you've seen one chart, you've seen them all. 4082. All the way to 41.82. So you're getting a $100 range. Not every day, but from the bottom of the channel to the top of the channel. So again, have a game plan. Tomorrow the game plan is look for those highs to get taken out. And if they don't, then we're going to be looking to get on the short side. CPI data is coming out. Coinbase is going to be reporting. We'll be playing that. We'll be playing puts on that one. But again, with SPY, we will definitely be ready for any move, and we see the support. If we break these lows, we're going to be short. If we ride out into a breakout, we're going to be long. All right, take care. God bless.